What's going on, Digital Wildcatters? Had a busy week in the private and public markets, lots of things to talk about. We're going to dive into Tesla's valuation first. Tesla stock absolutely been ripping over the last few days. It's up 25%, which now makes it the most valuable auto manufacturer in the world. They're more valuable than Ford, more valuable than GM, more valuable than Toyota. You name it, they're the most valuable auto manufacturer in the world. They got a market cap of $224 billion now. Now, if you know their CEO, Elon Musk, you know that he's not quiet. He's on Twitter. He's trolling. He's talking shit. I'm here for it. I'm a big Elon fanboy. Defend the guy to my grave. I can't defend Tesla as much as I defend Elon, but I love the dude. I love everything that he's doing. But with Tesla stock ripping, he was on Twitter. He was trolling, and he was just trolling the shorts. He was trolling the SEC. First, he dropped a tweet saying, "Who wears short shorts?" with some laughing emojis just to add some salt to the wound. And that got all the short sellers riled up, all the bears. They don't like seeing Elon talking shit. But then he has to go after the SEC. He said the SEC, 3-letter acronym, the middle word is Elon's. Tesla will make fabulous short shorts in radiant red satin with gold trim, and will send some to the Short Seller Enrichment Commission to comfort them during these difficult times. Elon. Bruh, my man, I love you. I don't want you to go to prison. I know Tesla's board is having a meeting right now, and they're like, "Hey, we need to get Elon a personal assistant. Follow him around. Anytime he's on the tweeter machine, they need to knock that phone out of his hand. Just make it look like an accident. Knock the phone out of his hand. Get him off Twitter." I can't explain Tesla's valuation. I think it's insane. I think it's way too high, but the market is the market. It's going up. Elon's on Twitter trolling everyone while it's going up. 2020, it's a crazy world. Over in the fitness industry, Lululemon acquires Mirror for $500 million. All I know about Lululemon is that my wife is always buying their leggings, $150. I'm like, "Why are you spending $150 on leggings?" And she's like, "Oh, they're so comfortable. I can't wear any other leggings other than Lululemon." Look, I get it. Quality product demands a quality price. And they've got this cult following that's willing to spend $150, $200 on a pair of pants. So what are they doing with the Mirror acquisition? What is Mirror? Mirror is literally a mirror by day, and then with the flip of the switch, it turns into a digital workout piece of equipment. It's got classes. It's got a subscription model. I think it also measures some KPIs, maybe like body mass index and body fat percentage by looking at you and calculating. I don't know. I could be making that shit up, but I'm pretty sure I've seen some pictures or videos of that. So why would Lululemon, a legging and clothing manufacturer, have any interest in a hardware startup? Well, there's a big arms race between some of these companies, Peloton being one. Peloton sells an outrageously priced exercise bicycle, and it comes with a, like a little TV screen, and you get these classes and subscriptions and yada, yada, yada. Everyone that has a Peloton loves it. I hear nothing but good things about Peloton. Essentially, Peloton's model, it's kind of like Apple. Apple doesn't make all of their money off of iPhone sales. The iPhone is the distribution channel. It's the piece of hardware. And then they make all of their money off of subscriptions, whether it's apps, movies, music, whatever it might be. Apple is a subscription company. Peloton is a subscription company. Now Lululemon wants to be a subscription company, and they did that by acquiring Mirror. So now that they're getting these Mirror products inside people's homes, which a Mirror costs $1,500, it's got a $39 monthly subscription. Obviously, you're not going to have the Mirror and not have the $39 subscription, or else you're just going to have a $1,500 mirror sitting there, right? So now they have this distribution channel that's sitting in people's homes. If you're a middle-aged woman, 30 to 40 years old, you're working out in front of your mirror, you're getting in shape, you're looking good. Now you need a $150 pair of Lululemon yoga pants to go along with that. It's just, it's like peanut butter and jelly. It goes together. So I like the move for Lululemon. I think that this arms race that we're seeing in the fitness space is really interesting, especially given COVID. People are having to work out at home. They're wanting that sense of community. They're not getting to see people at the house. I like the move. I think it's a good move. Now for some more depressing news, we're going to move over to the oil and gas industry, where the oil and gas industry is just dropping bombs. Just boom, 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 bankruptcies everywhere. Chesapeake was the godfather of the American shale revolution. They were at the top of the hill. They kind of started this thing. And so it's really a good analogy of the state of the American oil and gas industry, the shale industry, seeing Chesapeake go from the top all the way down to bankruptcy. Sanchez Energy, another active shale player down in South Texas, Eagleford, reemerged out of bankruptcy this week, wiped out all of their debt, renamed as Mesquite Energy. I had a joke over on my Twitter. I said Sanchez Energy is renaming to Mesquite Energy because they're going to burn that shit down to the ground too. I don't have much confidence in the asset. I don't have much confidence in the management team. Chapter 22 bankruptcies are a popular thing in American oil and gas. And it's not just land operators. You're seeing it offshore too. Seadrill this week, delisted from the New York Stock Exchange. They're now trading as a penny stock. I used to be a shareholder in Seadrill. I love their equipment. Thought it was a good company. Over the last few years, this was a summary of my investment experience in Seadrill. Just a bomb. Lost a lot of money. Seadrill's losing a lot of money for shareholders. Delisted from the New York Stock Exchange, now selling as a penny stock. Back over in the private sector, Palantir is raising $961 million. They're saying that they already have half of it sold. Palantir is a very secretive company. I don't know much about it. I don't think anyone knows much about it, but they're a big data analytic company, and most of their clients are government bodies, whether it's Department of Defense, military, police units, whoever it might be. That's who they're providing data and analytics to. They got a lot of criticism for some of their activities, including gathering information on undocumented immigrants and aiding in some workplace raids a couple of years ago. We got some really big names behind the company. It's founded by legendary investor and founder Peter Thiel. They're planning on doing an IPO later this year, but with this recent capital raise, don't know if they're going to be doing that IPO. PitchBook says that they've raised $2.3 billion already in the private markets, but they're a private company. They're a secretive company. They have some rounds that were unannounced, so it's actually believed that they've raised more than that $3.3 billion, but the amount is unknown. Big data, big government play. Who knows what they're doing? All I know is they've raised a lot of money. They're worth a lot of money. It'll be interesting to see if they actually go public and provide an S1. That way we can get more information on the company's financials and see a little bit more about what they're up to. We had a tech startup go public this week. Had a hell of an IPO. Lemonade. Not the drink. Look, I love lemonade. I love a good glass of lemonade every once in a while. I'd prefer water most times, but lemonade's a decent drink. I don't understand the name and the context of this company. Maybe it's out there. Maybe I need to find it. But Lemonade is a tech company that's looking to disrupt the insurance industry, and I'm here for it. I've never heard one person say like, holy shit, I love my insurance company. I love my car insurance company. I love my medical insurance company. Not once. You don't ever hear anyone say that they love their insurance company. So it's definitely an industry that needs to be disrupted. Lemonade has two product offerings right now. They offer renter's insurance and homeowner's insurance in the United States. I also think they may have some product offerings in international markets. They've raised over $480 million in the private markets, including a $300 million commitment from SoftBank. Let's give a round of applause to SoftBank. SoftBank has just been getting absolutely hammered here lately with some of their investments, so it's good to see them get a win. Look, everyone needs a win. You know, you need something to lift your spirit, so congratulations, SoftBank. So on the first day of this IPO, Lemonade absolutely takes off. Opening price $29 per share, and it skyrockets 139% on the first day, ends the day at $69 per share. Nice. I'm hoping to see some success from Lemonade. I think that it's an industry that needs to be disrupted, as I said. I think that they have the opportunity to pivot into other verticals of insurance, so getting out of just the renters and homeowners insurance business and getting into car insurance, maybe medical insurance, life insurance, all the insurances. Fuck them all. Disrupt them all. I actually interfaced one time with Lemonade. I was looking at getting some renter's insurance on the office. They didn't offer commercial plans at that time, so hopefully they'll have some commercial plans rolling out. You know, I'm bullish on it. I'm probably going to buy some Lemonade stock because one, I want them to succeed. Two, their customer service is really good. So if you have a good value proposition, you have good customer service, and you have a business model and technology that actually provides a solution to a problem, I don't see any reason why you wouldn't be bullish on that company. All right, guys, busy week. Hope you enjoyed the show. Leave your feedback in the comments. You know, let me know if I'm a piece of shit. Did I do a shitty job? What can I do better? Let me know what you want to see. I think I'm going to do this show every week. I'm going to drop the show on Friday. So let me know in the comments. If you liked it, hit the subscribe button. See you guys next week.